Are we officially in a buyer's market? Well, there's definitely some indicators in the current market that suggest that we are in a buyer's market. Things like high levels of inventory, low levels of sales or low levels of demand, and this gap that's creating downward pressure on home prices. Now, in this video, we are going to look at the recent market stats to give you a better understanding of what's actually happening in the market and to answer the question of, are we actually in a buyer's market? Now, before we jump into this, my name's Matt. I work with the Linda Maguire team. And if you like this kind of content or get any value out of this video, consider subscribing to the channel. And if you're looking to talk about buying, selling, or investing in real estate in the GTA, you can click the link below and book a call directly with me and my team. Now, there's no doubt that the market has shifted in 2023. Buyers have more options to choose from than they did in the past. And because of this, they have a lot more bargaining power. Now let's dig into the stats a little bit to give you an idea of what today's market looks like. Now, the first thing we're looking at is the number of active listings or our current inventory in the market. Now, we're going to ignore November on these charts because we're only a week in and they're not accurate numbers. But you can see here the inventory levels remain fairly stable from the start of the year into the spring months of April and May. And since then, we've seen a consistent increase in our levels of supply, in our active listings, and giving buyers more options to choose from. Now, the next thing we're looking at is the number of sales in the market and how many homes are selling each month. So this picked up into the spring months in April and May, which we typically see on a normal year. And then we've seen a pretty consistent and quick decline in the number of sales that are happening. And this represents the decrease in buyer demand that we're seeing in the market. Now, I also like to look at these numbers side by side because it's basically our supply and our demand. So you see the number of listings in blue that's been increasing since May and the number of sales in green that's been decreasing since that same time. So our supply has been increasing consistently and our demand has been decreasing, creating a bigger and bigger gap between the two. Now, what comes from these two numbers is what's called months of inventory. Now, months of inventory is a great indicator to watch to tell us what type of market we're in, whether it's a buyer's market or a seller's market. When we have low levels of inventory, like 0.9, 1 month, 1.3, we are in a seller's market. And what this stat means is in April, when we have 1 month of inventory, all of our inventory will sell in 1 month if no new listings hit the market. In October, we had 3.9 months of inventory. And to put this into perspective, 3.9 months of inventory is the highest number that we've seen in over 10 years. So statistically, we are in the strongest buyer's market that we've seen in the last 10 years, and it changed very quickly. In June, we had close to 1 month of inventory. Come October, just a couple months later, we have about 4 months of inventory. Now, what does all this mean for home prices? Well, when buyers have more options to choose from and hold more bargaining power, we're typically going to see downward pressure on pricing, and that is exactly what we're seeing in the Burlington market. So this is a pricing for the Burlington market over the last 12 months. And you can see we started in December about 968. We saw a steady increase for the first 5-6 months into the spring market. And since then, when we started to see higher levels of supply, lower levels of demand, we've seen consistent decreases in pricing until right now in October. So if we continue to see this gap between supply and demand increase further and further, our months of inventory is going to increase and will likely cause more downward pressure on pricing. Now, these are the current stats, but I want to talk a little bit about what we're actually seeing on a day-to-day basis in the market. Buyers have a lot more options to choose from, and inevitably they have a lot more bargaining power. So we're seeing buyers submit what some sellers would consider low ball or lower offers below asking price on properties. And if they're not coming to an agreement, a lot of buyers are moving on and saying, you know what, there's other homes out there for us to choose from. We're also seeing less activity on listings when it comes to showings and offers. And because of that, homes are taking longer to sell. And in a lot of cases, we're seeing multiple price reductions before homes do actually sell, which is something that's indicative of a declining market. Now, I know interest rates are higher than they've been in the past, but I think the current market poses some opportunities for buyers to get into the market at a lower purchase price. And I'm going to give you a real life example here. I had some clients looking in the Hamilton area for a home for $625,000. They saw their dream home online. It was listed for $750,000. It lowered to $730,000, and then a couple weeks later, it lowered to $699,000. We brought them an offer for $625,000, and the sellers basically said, no, we want $699,000. That's where we're listed. That's where we believe we will sell. 2 weeks later, I got a call from the agent. Hey, if you're still willing to offer $625,000, we will take it. We purchased it for $625,000 with 2 conditions, and it just firmed up last week. And it just goes to show that there are opportunities out there for buyers right now, and you just need to know where to look for them. Thanks so much for watching. Have a great day, and we'll talk to you soon.